Hey, my name's James Nicholson and welcome to my YouTube channel. On this channel, we talk about property investing, interest rates, house prices, mortgages, and all of that stuff in between. And today, I want to talk about this week. We've got two very, very big meetings this week. We've got the Federal Reserve in America and we've got the Bank of England this week as well, discussing whether they should drop interest rates. So I'm going to talk about, do I think they're going to drop interest rates? When do I think they're going to drop them? If they're not, should they drop interest rates, and what that means for you as an investor or homeowner. While you're here, if you haven't subscribed to the channel already, do subscribe to the channel over there. Go on, do it right now. Subscribe and hit the bell notification. We're on the way to 20,000 subscribers now. We're that close. Have a look around here. You'll see how close we actually are. So go on, subscribe. That will really help us get there. And smash the like button or tickle the like button. Do something to that like button, guys. That massively helps us with the YouTube algorithm. Comment below if you've smashed it to help me with the algorithm. That will get more views on the channel, then more subscribers. And all of this works gloriously together. So, two big meetings this week. We've got the Fed in America. And we've got the Bank of England, BOE, in the UK. And they've got a big decision this week. Now, what's happened is, obviously, unless you've been living under a rock, you know inflation's been crazy the last few years. Probably why you're watching a video like this, right? And so, yeah, inflation's been absolutely outrageous the last few years. It's really hit people, particularly people on a lower income. They get hit massively hard by this. Energy costs, food costs, this stuff really matters to a lot of people. And so the Bank of England's job is to bring that inflation under control, get it close to their target, which is at 2%. Now, the Americans, they've done that. They've got their inflation at under 2% now. It's at like 1.8%. Not officially, but that's where it's at. And if you look at their inflation data for the last 6 months, it's really been controlled quite well. Now, the fear is in America, and they've done a lot of topics and talks this weekend about this, is that have they over tightened? Should they have started dropping interest rates that little bit quicker? Because here's what happens. When inflation is going down, you need to follow with the interest rates. Otherwise, you're going to cause unnecessary pain. And the fear is, especially in America, is that we're at a point now where vacancies are starting to drop. Companies will start recruiting less, and then very quickly we could switch to unemployment rising, and that's a very big problem. The big problem here is when you move interest rates up or down, there's a massive lag for this to have any impact. Now, these two agencies are going to get massive pressure from the UK government and the American government because we've got two very, very big elections this year. We've got the Tories fighting for their life, and we've got Trump versus Biden #2. And so the government are going to put pressure on the Fed, on these central banks to do something to stimulate the economy, to keep it going and make sure that those guys don't lose. So there's a lot to put here. Now, the Federal Reserve have come out this weekend in interesting language, and they're saying that they feel that interest rates are going to need to start being cut fairly soon. Now, the expectation is that the Federal Reserve this week will hold interest rates. Not many people are expecting anything to happen there. They think that they should maybe cut them, but they won't. They'll hold them one last time. Now, that's interesting because what happens with the Bank of England, we always go second. Our meetings are always after the Federal Reserve, and that's because we want to see what they do, because our currencies and economies are so intertwined that mostly, if you work for the Bank of England, you follow the Fed. That's generally what happens. It's a very common phrase. It's what happens. And so the Bank of England is way more likely as well this week to hold interest rates again. Neither of these. It's literally impossible this month that interest rates will go up. I cannot see that. There is a less than 0.1% of that happening. It's just not going to happen. There's a slim chance that we're going to see a drop in America, but not the UK. But I still feel that both of them will hold. Then what will happen is the Federal Reserve will likely drop in March. I don't know if we will. I think we might drop in April. I think we might wait 1 month. We're still following the Fed, but we'll wait 1 month because our inflation is a little bit higher than theirs is still. And so that's interesting. So I think that that's what the markets are pricing in as well, a rate drop by the Fed in March. They're talking about it a lot more. What's interesting, if you listen to these guys' meetings, the Fed, the last few meetings, they're talking about interest rate drops. They're saying we're going to drop interest rates multiple times in 2024. The Bank of England are way more tight-lipped on this. They're saying we can't talk about this. And I think their Bank of England is getting a lot of pressure because they acted a little bit late on inflation. They didn't really do much, and our inflation was sticking around longer than everyone else's. So what was interesting is I just feel that the Bank of England are going to be doing very similar to the Fed, but they don't want to go out there and wave the flag of victory just yet because it undoes what they're trying to do, and that's to just make sure this inflation is finally crushed and moved on. Now, interest rates, it's looking like both sides of the pond could get close to deflation at some point this year, and that means interest rates could start dropping a little bit quicker than you might think. Now, how does this relate to mortgage rates? That's what you really care about. Interest rates are great, but you're not a big central bank. You're not HSBC or someone like that. You want the mortgage rates. So the mortgage rates, I don't think you're going to see a massive drop. We saw some rates. I did a buy-to-let video yesterday at 3.99%. I think that the best rates that you're going to get this year, this is my expectation, that you can borrow at with a decent loan to value and a decent mortgage price fee, I think you'll get 3.5% this year. So if you're watching a video like this thinking, I'm so close to remortgaging, what should I do? Should I wait or should I not? If you're on a variable rate right now, which some of you are on a variable rate of 8.9%, get off that. Like, for the sake of waiting for a 0.5% drop, I would just fix a deal now. Yeah, you might get a slightly better deal at the end of the year, but just get a deal now before all that risk and save all those monthly payments that you could just waiting for this. It's an interesting time, but I don't think you're going to get much of the Federal Reserve and the Bank of England interest rates passed on to you. I think the banks have already done that. They've already planned what's going to happen. Anyway, let me know, what do you think is going to happen with the Federal Reserve or the Bank of England? Do comment below. Do like this video, guys. Subscribe to the channel if you haven't done already. We've got so many videos, 600 videos now. And if you want to learn property investing, we've got a discount on the fundamentals of property investing. I'm going to link to that in the description below. It's less than £50. It's got nearly 100 videos. It's updated. It is absolutely a game changer for you guys. So go and check that out and enjoy that course while you're here. It's a one-off charge. Do check out all the other content on my channel, including this video right here.